Okay. MK Surana, Chairman and Managing Director of HPCL now joins us. Mr. Surana, good morning. Thank you for joining us. Uh, I don't know from where to start and where to phrase my question, so I'm going to keep it open. What changes in your life now that crude prices have touched zero last night and Brent prices were sub $25?
So there are two parts of your question. First is that WTI breached zero yesterday night. It went to minus 35. I think that is an unnatural activity and it does not mean much as far as we are concerned who are more in the real world. I think that is an activity of because WTI was settling today futures. So there must be some panic selling by somebody. And if you see the same time, the June future was almost $20. Even yesterday, Brent settled around 20. Dubai settled at around 20. So the physical trading, it remains a low price regime in 20. That's the way I put it. And that's good for refining and marketing companies because lower food prices are always good for us. Only thing is it should be stable prices.
What will happen to the cracks? What will happen to inventory losses? How does one fathom profitability and also ratios for OMCs now?
So as far as the cracks are concerned, the diesel cracks were better than what it were earlier. The MS cracks continued to be on the lower side. The fuel oil cracks were better. And because diesel is a predominant portion of the product slate in Indian refineries, the lower crude oil prices with a good diesel crack should be good for the refiners as far as the DRMs are concerned. I think the Singapore DRM in this month are better than what it was earlier. As far as the inventories are concerned, that is more the way it moves day-to-day basis. And we need to see the net effect of it, how it works out.
Okay. Will you be passing on the benefit of this as per the original calculation which you always shared with us? What is happening on the product prices? Because we normally look at Brent and Amex and tend to make an opinion of what will happen to retail prices. But you've always explained to our viewers that you should look at the composite basket of petroleum products. So what is happening there?
So there are many factors. One thing is like exchange rate is 76. So that also has got an impact on the pricing. Then what crude you are processing was the earlier bought crude. So while we have got a way of calculating the product price based on the international market, but there is too volatile a market and it should settle it a little bit. Then it will be better to talk about the product pricing. Because definitely the diesel, the petrol cracks are negative. You don't produce at a negative crack petrol. No? So there is some variations are there which need to get settled a little bit. So then the composite basket of the products is there, but otherwise it is supposed to be based on the international pricing. But if there are too much of variations, then we need to ensure that the too much of volatility is not affecting the market also.
Mr. Surana, now that oil prices have come down, is there scope for India to increase the oil reserves? Are you in a position to do any kind of forward booking? Are you also in a position to perhaps book your future demand currently by the futures route or by getting into long-term contracts with your supplier? Are you considering things on those lines where you're able to take benefits of these benign prices?
See, actually, every company has got their own strategies to contract the crude and hedge it. So normally, as you may be aware, that the crude contracts are term contracts and the spot contracts. Whichever way it is term or crude, what you pay is the pricing which is prevalent in the month of delivery. or dispatches. The only thing what you settle is the premium or the discounts. So the term contracts all the companies have to some extent. Then we also got spot contracts. Now there is always a question that whether how low is low, and that is the question which always comes in the mind when somebody wants to book the crude for future or not. But the call is always taken in the company based on the philosophy which they have been following. We follow a philosophy of hedging our risk rather than making the unnatural gains by hedging or something like that. But definitely the crude prices, the way it appears, are likely to be benign for some more time. And I will expect it in the 20s only for some time. And therefore, and there is substantial stock available in the world. So I don't think crude price is going up in the near future, even with discount for yesterday's event.
Is there provisioning, is not with OMC, but do you think Government of India currently has option to increase oil strategic reserves? I'm not aware of it, so I'm asking you a question that how can Indian government or how can the current administration use lower oil prices to ensure that our next 2-3 years of our energy needs have been taken care of? Is there something which has been done in the past, and do you think we have capacity and storage available?
No, we have got certain strategic reserves which have been made over a period that is around 5 million metric ton or so. But that is very little compared to the total requirement of the country. So whatever the reserves are there, that government has already taken actions to take the oil in those. But that is not substantial enough, so we still need to do a lot to make the strategic reserves, more strategic reserves in the country to take the advantage of this type of situations as far as physical crude is concerned. As far as the paper hedging is concerned, each company will have its own strategy, but there is always a risk, and because when it was 100, nobody thought that 70, it will go below 70. When it's 70, nobody thought it will go 40. Now, nobody imagined that it will come to 20. And yesterday's situation, nobody would have imagined even in 3. So crude is always that way, a bit of a volatile commodity and uncertain commodity. So hedging has got its own risk.
Okay. Closing comments. What should, in general, this mean for divestment of an asset like BPCL? When the oil market per se has taken a complete tumble, there would be disruption which will happen across the supply chain now. So I'm just asking you not to comment specifically on BPCL, but specifically if Government of India is looking at selling an asset like BPCL in this kind of a market, do you think there is going to be a paucity of buyers? It's going to be difficult to sell an asset like BPCL or for that matter any OMC?
That's because there is already certain actions on BPCL, so it won't be correct on my part to comment on that. But definitely the current situation is not something which somebody would imagine, let's say, 2 months back. And that is a combination of two parts of it. One thing is COVID-like event, which has definitely had a substantial impact on the demand side. And there is a OPEC plus and the producing countries' actions some time back, which has made the prices to run for the flight. And in this situation, there is certain things which are unprecedented. So how the oil producing companies will work with that, because I don't think that the cuts which has been announced are good enough to absorb all the inventories and which are there in the surplus. And at the same time, the demand because of this lockdown in various countries is also lower. and therefore there is likelihood of surplus inventory for some time. And in that situation, the crude oil prices continue to be low. Now it depends on the capacities of the individual companies, how they balance their budgets and what are their priorities in these situations to deal with alternative options. Yes, that nobody can deny that the world post-COVID is different than what was pre-COVID.
Appreciate your time and glad you could join us. Jim